Good morning this Tuesday, the 24th of June. I'm Grady Wolf, Senior Market Analyst with Bell Direct. Wall Street started the new trading week with a surprising but welcome rally as investors welcome the delayed reaction by Iran to the US launching an attack on its nuclear facilities over the weekend. Oil prices tumbled overnight as investors now bet the impact of the Middle East war won't be as great as it was first expected on the global oil supply from the region. The S&P 500 rose 0.96% on Monday, the Dow Jones gained 0.89%, and the tech-heavy Nasdaq ended the day up 0.94%. In Europe overnight, markets extended their losing run though to close lower as investors in the region still fear retaliation from Iran might be coming. The STOXX 600 fell 0.25% on Monday, while Germany's DAX lost 0.3%. The French CAC closed 0.7% lower, and in the UK, the FTSE 100 ended the day down 0.2%. Across the Asia markets on Monday, it was mostly a negative session following the US attack on Iran over the weekend, sparking further concerns of escalated and prolonged tensions in the Middle East and beyond. Japan's Nikkei fell 0.13%, Hong Kong's Seng rose 0.67%, China's CSI index gained 0.2%, and South Korea's Kospi index ended the day down 0.24%. The ASX started the new trading week in the red with a 0.36% loss at the closing bell as investors fear Iran will respond to the US attacks from over the weekend, which is the key driver of oil and uranium prices further rising yesterday. The US entering into the Middle East war takes the conflict from a regional to a global war, spreading fear and further uncertainty among global markets and investors. Financial stocks were up due to their safe haven nature in the local market, while energy stocks are on a run amid fears of the impact on global oil supply due to the Middle East war. Industrial, healthcare and staple stocks took the biggest hit on the local market yesterday to start the week with losses over and near 1% each. Homewares retailer Adairs followed the recent retailer trend by plunging over 20% on Monday after warning that FY25 earnings will come in below FY24's amid elevated promotional activity eating into margins on the back of slowing consumer spend. On the commodities front this morning, as I mentioned, oil has tumbled 8.85% to trade at $67.49 a barrel. Uranium is still up 1.5% at $75.90 per pound. Gold is up 0.03% at $3,370 an ounce, and iron ore is down just 0.02% at $94.75 a tonne. The Australian dollar has strengthened against the greenback to buy 64.64 US cents, 94.41 Japanese yen, 47.63 British pence, and 1 New Zealand dollar and 8 cents. Ahead of Tuesday's trading session here in Australia, the SPY futures are anticipating the ASX will open the day up 0.73%. Virgin Australia is also set to rejoin the key index today through an IPO, pricing the company at $2.90 per share. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on SmartPay Holdings from a buy to a hold and have reduced the 12-month price target on the company on the full services provider of payment solutions after the company announced it has entered into a scheme implementation agreement with Shift4 Payments to be acquired at a cash price of $1 New Zealand dollar and 20 cents per share. The analyst believes the offer is opportunistic and undervalues the quality of the asset. And Trading Central has identified a bearish signal on Woolworths Group following the formation of a pattern over a period of 28 days, which is roughly the same amount of time the share price may fall from the close of $31.41 to the range of $30.20 to $30.50, according to Standard Principles of Technical Analysis. And that's all we have time for today. Have a terrific Tuesday and happy investing.